Good evening, everybody, and welcome back to Fast CPAs and Consultants. As usual, here we are with our CPA, Fulton Abraham Sanchez. Good evening, Fulton, and welcome back to our tax talk series.
It's a pleasure being here.
The same. Tonight, we are talking about the second part of offshore real estate investment taxes. Fulton, shall we start?
Yes.
Okay. Question number one. Why are foreigners allowed to buy property in USA?
The basic reason is the U.S. is a very friendly country, open to receive foreign capital. There is no restriction in the USA for any foreigners, any non-U.S. citizen or non-U.S. resident to own property in the USA. Many times, foreigners come to the U.S. and they buy property, and then something happened and they find that there is a minimum, or say a maximum amount that is exempt of a state tax, I mean inheritance tax. And when the inheritors find out this, they pay taxes, sometimes steep taxes up to 40% of the amount of the property over $60,000. So when foreigners buy property, foreigners are allowed to buy property in the U.S. Yes. Why they buy property in the U.S.? Because this is a democratic country and there is no restriction in the in and outs or inflows and outflows of capital. There are other countries in Latin America, for example, that there are exchange controls. That doesn't happen here. There is also, for example, Canada in 2018 or 2019, they imposed a restriction for the purchase of property by foreigners because many foreign investors, Chinese investors, were buying properties. And in Canada, in Ottawa, basically in Ottawa, and they were changing the profile of propertyship in the United States, in Canada. So the government, in this case the state, assess a limit for the purchase of foreign citizens, and also a tax for the sale of the property for when it's sold for a foreign investor. That doesn't happen here in the U.S. The only reason that Canada did that is to decrease or to try to control the increase of the pricing in real estate properties and trying to decrease or try to control the formation of a bubble, real estate bubble, where the bubble burst, then this is that will be a big crisis. Fortunately, as I would say, fortunately, the pandemic hit the world, and then things start to cool down. But that happened in Canada. Here in the U.S., taxes for foreign ownership don't exist. Restrictions for foreign ownership don't exist. The only thing is that whenever a foreign citizen is planning to buy property in the USA, it's better to do it with a limited liability company, to have a vehicle that is separate from himself or herself and buying the property. So if anything happens when the inheritors get the property, they will not find the bad surprise that they have to pay a steep tax rate, 40%, that will be the state tax.
Okay, got it. Thank you. Is foreign rental income taxable in the U.S.?
Yes. Whenever U.S. citizens own a property in a foreign country, it will be treated the same as the property in the USA. You have to report the income and you have to deduct the expenses, except, as we said in the previous video, you cannot deduct the taxes, the real estate taxes that you pay in the foreign country. That is not deducted.
Yeah, understood. And do I have to report foreign real estate to IRS?
Yes, you do. And the reason that you have to report that rental income, that is foreign rental income, is under the principle of worldwide income. We refer to this in the last question on another video, and we explain there with over a lot of detail. In this case, I'm just going to say that wherever you have income, wherever your assets are located, and these assets are producing income, then you have to report that income and to take the income and the expenses and report it to the IRS. If your assets are in a foreign country and are not producing income, then there is no need to report it, because the only reason, the only thing that the IRS is concentrated on is income. That's why the report is income tax return. So the income tax return is a summary of all your income in the entire world. Dividends, rental income. In this case, rental income is the income that you receive for the rental of the property minus the expenses.
Understood. And how can I avoid capital gains tax on foreign property?
The only way to avoid capital gains on a foreign property is by having or making that property a second home, meaning that you do not rent the property. You say you spend an X amount of days, or it's your summer house, or it's just your retirement house, or it's just your property that you have it there, a relative is living there, or someone is taking care of the property, is not paying rent, then you don't have any income. The only way to avoid paying taxes on foreign real estate is, first of all, not making income, not earning any income, not receiving any rental income from the property. The moment that you receive rental income, it becomes taxable and it becomes reportable.
Got it. And what is considered a second home for tax purposes?
Oh, see, that's another question. Second home for tax purposes is a home that you do not rent, and second, that you spend an X number of days there. For example, if you want to buy a second home and you are looking for financing, you cannot say that this will be your second home and then you rent it out, because that will be mortgage fraud. And the bank can require payment of the entire amount that you owe, and then take you to court and then close on the property and take the property away from you, and you will be left with any amount that is in the property, that is not in the property, if the property is not enough to pay the loan and any legal expenses. So be very careful whenever you are applying for a loan, saying that this is my second home and you plan to rent it. The advantage of having a second let's say labeling or declaring as a second home is that you will have to pay a lower down payment. When you buy a rental property, you have to pay 20% of the property as a down payment from the beginning. If you have a property that is second home, you only pay 10%, and sometimes if the property is available for a special credit sponsored by the government, FHA, you pay 3.5 or 5% as a down payment. So it has the advantages. If you want a second home, I've seen clients that they have their home, they have a second home, they do not rent it, and they have an apartment, or they have another home that is rented. So the basic difference is that in one you live even 5 days in a year, but you do not rent it. Even if you don't live there ever, you cannot rent it. If you rent it to a third party, and even to a relative, and you pay and you receive more interest and you receive a rental income, then it will be taxable. But one. Second, if the mortgage company or the bank finds out, you will be in trouble, because the bank will foreclose the property and will require the payment of the entire note, the entire amount of the loan. Since the moment that the bank realizes that you have not been honest. So be very careful whenever you are trying to label or classify a property as a second home, because the bank, even though it's very advantageous, you have to put less money in advance for the down payment, but it will not be advisable if you are planning to rent the house. Even if you have someone living there and the person pays in cash, just don't do it. It's fraud.
I see. Thank you. And how does IRS know about foreign income?
The IRS has signed agreements with the foreign banks. Foreign banks are required to report to the IRS any holding from U.S. citizens. Whenever the bank signs a form, whenever the bank opens an account, it gives a form to the person opening the account, as form W8, and the form W8 is for the U.S. for anyone saying I am not a U.S. citizen. If the person is a U.S. citizen, the bank will request that the person signs and declares that he's a U.S. citizen, and with that information, the bank will open the account, and from that moment on, any money that is earned by the holder of the account as interest, it will be reported to the IRS. Not as the interest itself. It will be reported as a balance, meaning today that in 2018 you have a balance of 120, just to give you a number, and the next year you have a larger balance because of the interest you have earned. That balance will be reported to the IRS, and to match that, you have to report what is called FBAR. We have another video specifically dealing with the FBAR and all the possible combinations of questions about the FBAR. So for that, once the bank reports to the IRS directly, the taxpayer is obligated to report as well, not to the IRS but to the Treasury, about the holdings of their accounts with foreign banks. So that's how there is this matching between the information that the IRS receives and the information that you report as a taxpayer. IRS does the match, and then is when it is if there is any inconsistency, the IRS will send you a letter stating, we have these balances and you have reported this, please explain the difference.
Understood. Thank you. And do I have to declare a real estate property abroad?
Yes, but only if there is rental income. If there is no rental income, you don't have to declare the property outside of the U.S. because it is not income producing property.
Okay, got it. And the last question of this topic, how do I report a foreign real property sale on my taxes?
If the property is your second home, okay, if the property is your primary residence in the foreign country, you don't have to report the capital gain. You don't, because that is your primary residence. Up to $500,000 for couples married filing joint. If you have the sale of your second home, you have to report the capital gain from that second home. If you have a third home that will be an investment property, then you have to report as well the capital gain that you earn in the selling of that property.
Okay, got it. Well, thank you, Fulton, for this detailed and helpful information. And thank you, everybody, for joining us. You can check on our channel the different topics we have already explained. For example, like the one that Fulton mentioned about the FBAR. We made 2 videos about it, so check on it. And in case you have further doubts, please do not hesitate to send us an email or write it down in the comments. And also be sure to subscribe to our channel so you can be notified when we publish a new video about taxes. Thank you again and see you in the next video. Thank you, Fulton. Bye-bye.
Bye-bye. Thank you.